If you're still trading everything through a single limited company, you're leaving yourself completely exposed. One legal claim, one bad contract, one unexpected debt, and your hard-earned profits, property and cash reserves could all be at risk. The directors who protect and grow real wealth don't run the company, they run a structure. A holding company sits at the top, ring-fencing profits, assets and investments, while a trading company takes the day-to-day risk below. It's how serious business owners protect what they've built and prepare for expansion. In this video, I'll walk you through a clear example, a trading company and a property company under one holding structure, so you can see how it actually works in practice. And if you want to go further into advanced tax planning, multi-entity setups and group relief strategies, stay until the end because I'll show you how to get inside our YouTube membership where we go deeper and how to work directly with us at Tax for Pros. Let's start with what a holding company actually is, and more importantly, why it matters. A holding company is a parent company that owns the other companies. It doesn't trade, invoice clients, or take on risk. It exists to hold shares, profits, and long-term assets. Think of it like a safety vault above your trading company. The trading company handles operations, takes payments, hires staff, and carries the risk. The holding company quietly owns the value, your equity, and your retained profits. Structurally, it's the difference between just running a business and building a business that lasts. Imagine you run ABC Trading Limited, a renewables or service-based business. It's profitable, money builds up in the company. Rather than leaving all that cash where the risk lives, you move it up to the holding company. And under UK rules, dividends paid between UK companies in the same group structure are generally tax-free. That means ABC Trading Limited can declare a dividend up to ABC Holdings Limited without paying tax on that transfer. If the trading company ever faced a claim, bad debt, or even liquidation, the profits sitting safely in the holding company remain protected. Now let's talk about where property fits into this, because this is where most directors get it wrong. You should never buy or hold property inside your holding company. The holding company's job is to own shares, not carry trading or asset risk. Instead, create a separate Property SPV, a special purpose vehicle, underneath the holding company. So now you have ABC Holdings, it owns the group, ABC Trading, your operational business, and ABC Property, purely for owning and managing property. The trading company makes profit, pays a tax-free dividend to the holding company, and the holding company can lend or invest those funds down into the SPV to acquire property. That means your property assets sit in their own entity, completely ring-fenced from trading risk. If the trading company ever collapsed or was sued, your property portfolio inside the SPV is untouched. This setup isn't just clever, it's strategic. With the right group structure, you can move profits around the group without triggering tax. You can sell a trading company and keep the proceeds safely in the holding. You can reinvest into new ventures or SPVs without exposing everything else. And you build long-term wealth protected from operational risk. This is how established groups, investors, and family offices structure their affairs, and it works beautifully when it's implemented properly. At Tax for Pros, we design and implement these setups, making sure every part is compliant, efficient, and watertight. Now, let's talk about what most accountants skip: the ongoing compliance and record keeping. Setting up the structure is the easy bit. The real challenge is keeping it compliant month after month, year after year. Every transfer between companies, every intercompany loan, every dividend, every director decision, it all has to be properly documented. You need signed board minutes when the money moves between entities, intercompany loan agreements if funds are lent between group companies, correct dividend paperwork when profits move up to the holding company, clear bookkeeping entries that match those movements exactly. Without that, HMRC can look straight through your structure and say it's invalid, treating movements as income, loans, or disguised dividends. That's why this isn't something you set and forget. It's a living structure that needs managing, monitoring, and maintaining. And that's where firms like us, Tax for Pros, come in. We act as your group's financial control centre, managing your intercompany records, reconciling every movement, keeping the right documents signed off, and making sure your structure works exactly how it was designed to. You stay focused on growth. We make sure the structure behind it stays watertight. So if this has helped you understand how a holding structure really works and why proper management matters, here's what to do next. Start with our tax game plan. It's linked below. That's your foundation, getting your director's pay mix right, understanding profit extraction and making sure your structure works for you, not against you. Then, once those basics are nailed, join our YouTube membership for the advanced stuff, the proper planning. Inside we cover multi-entity structures, group relief and advanced director strategies that most accountants never even touch. And if you're ready to have it all done for you, professionally built, monitored and maintained, book a call with our team at Tax for Pros. We'll handle everything: setup, compliance, documentation and monthly oversight, so you can focus scaling while we protect what you've built. And a quick reminder, only 14% of the people who watch these videos are actually subscribed. If you've watched this far, you're clearly serious about building wealth, so hit that subscribe button before you go. I'm Sarah from Tax for Pros, helping business owners build wealth, not just businesses. Grab the tax game plan below, join the membership, and I'll see you in the next one.